It was as if Diwali has come in early for equity markets this year, and that's despite the gloom and doom around COVID-19. And markets were unstoppable. There were signs of recovery in the economy, and there are signs of recovery in corporate earnings. Also, vaccine hopes and stimulus packages have all pushed the markets to record highs. And if you've been wondering that despite all of this, if you still have great opportunities to invest in the markets, well, then in our Diwali special ideas for profit today, we'll talk about a list of 7 key businesses which long-term investors can keep on their radar and keep looking at it at their portfolio to add it, as they have the potential to give you great returns in the medium to long term. Well, the first stock that we are going to talk about is Axis Bank, which is one franchise that looks set to bolster its market presence and market share, and that's thanks to the relatively faster cleanup of its book as well as the adequate capital post the 2 rounds of capital raising since 2019. Now, the bank's provision coverage ratio is high at 77%, and the collection efficiency also touched 97% in the month of October. Adept management of cost is also a potent earnings lever going forward. Now, it is a long-term re-rating candidate for sure, despite the recent rally. Next on our list is COCHIN Shipyard, which has seen already a sharp recovery in the earnings in the last quarter. Now, beyond FY21, the earnings visibility is also backed by a strong order book, and that's of close to 14,000 crore rupees. That's over 5 times the annual shipbuilding segment revenues. Further, the project pipeline of 12 to 15,000 crore rupees is very strong, and the company expects awarding to pick up post the pandemic as well. Now, in our view, these positives are not reflected in the current valuations as it is trading at about 7 times the estimated earnings and also offers a good 5% dividend yield on that. So that's something that you should keep your eye on. HAWKINS is the second largest manufacturer of cookers with nearly 30% market share in the domestic market. Now, industry volumes for the first half of FY21 do indicate that demand for cookware continues to be quite robust, and that's despite the pandemic-driven market disruptions that we have been witnessing. Now, given the strong brand recall, the healthy balance sheet, and the defensive business, HAWKINS is definitely a safe haven for investors in these uncertain times. Now, next stock from Moneycontrol research stable is KIRLOSKAR FERRO Industries Limited, which if you see is one of the leading manufacturers of foundry grade pig iron and castings with a market share of 40% and 22% respectively in both these spheres. Now, what adds to our conviction over here is that it has been allocated 2 iron mines, which actually helps in backward integration and also takes care of the 30% of raw material requirement as well. So that's something which is going to really help in earnings going forward. Next on our list is LAURUS Labs, which has been a transformational story for sure. It has changed from an API company to a vertically integrated formulations entity, and its growth story is only likely to broaden from here on. Now, the custom synthesis business presents a huge promise in the going forward period in the months ahead and in the years to come. Now, in addition to the high earnings visibility, the company's strong execution credentials and also the sustained cash flow generation adds to our conviction on this stock. Now, from the auto component space, we have MINDA Corp on our radar, as it has recovered strongly post the unlock phase. Also, a sharp recovery that in demand that is being witnessed for, say, the passenger vehicle segment and the two-wheeler segment, coupled with an increase in the content per vehicle that is due to the BS6 norms, they make us upbeat about the prospects of the company going forward from here. At the current valuation of about 11 times the estimated earnings for FY22, the stock looks very attractive at the current moment. And lastly, there are multiple reasons to consider SBI, including the sheer size and heft that it has, the adequate capitalization, the strong liquidity, the low cost of funds, also the limited potential slippages and restructuring, the high provision coverage ratio, and an ability to raise funds by divesting stakes in its subsidiaries. Well, these are the top 7 stocks that we've chosen for you for Diwali, and with that, we wish you all a rewarding investment journey in Samvat 2077 with Moneycontrol Research handpicked 7 stocks. But please do speak to your financial advisor before making your investment decisions in these stocks.